Hi everybody, it's Terry Ryder from hotspotting.com.au. In my previous video chat, I was speaking to you about the way media is trying to portray a situation where house prices across Australia are falling and are going to keep falling, portraying the end of the so-called Australian property boom. And the way they're doing that is latching on to any set of statistics that appears to support their preconceived headline. It's a case of lies, damn lies and statistics, because you can take any bunch of figures and make it tell the story that you want to tell, whether it's a negative one or a positive one, if you've got an unscrupulous nature. So the way they're basically portraying a fall in prices is latching on to month-to-month changes. Now, anyone who's spent any time in research and statistics of any sort knows that month-to-month changes are often statistical aberrations. It's too short a time frame to get a meaningful feel for a trend in anything, but particularly in real estate, which is a slow-moving animal. So at Hotspotting, we tend to regard month-to-month changes in prices or home value indexes or median prices, however it's measured. We think they're irrelevant, meaningless, and should never be used. And most of the serious researchers out there agree with us. But CoreLogic is happy to pump out month-to-month figures, and media is happy to sensationalize their analysis of what these figures mean. So what's really happening with prices in Australia right now? Well, we've taken CoreLogic's latest figures and we've ignored the month-to-month changes, which we think are statistical aberrations, meaningless, and therefore should not be used, and concentrated only on looking at the quarterly changes and the annual changes to get a real feel for the underlying noise in property markets. So the latest figures for right to the end of 2017, published this week by CoreLogic, shows that at the end of 2017, Hobart is the clear leader amongst the 8 state and territory capital cities on price growth. It's actually got the biggest price growth in annual terms, which is the most important measure for both houses and for apartments. Houses are up 13% according to this source, and apartments are up 9%. Melbourne came in second on both measures for houses and apartments. Houses up 9% and apartments up 8%. And these results tend to reflect the latest figures that have come out of the Australian Bureau of Statistics as well. The ABS data to the 1st of October showed that with its house property price indexes, that Hobart was the leader amongst the state and territory capital cities, up 14%, and Melbourne was second on 13%. So there's some correlation there between the findings of the Australian Bureau of Statistics and CoreLogic when we're looking at prices in annual terms. The CoreLogic figures that came out this week tend to provide further confirmation that the wind down in the Sydney market is certainly happening. I don't think there's any doubt about that. According to CoreLogic, the annual price growth rates for Sydney now are about 2% for houses and just over 5% for apartments, well down from those double-digit growth rates that we've been seeing out of Sydney for the last 4 years. There was also some confirmation of the end of Perth's downturn. The home value index from CoreLogic for the September quarter showed a very small rise for houses and a very small rise for apartments for Perth. They are very small changes, but it's the first time in 4 years that Perth has delivered anything except negative figures. In annual terms, Perth prices are still down slightly, but only 1% in annual terms for apartments and 2% for houses in 2017. And that confirms my contention that the bottom has been reached in Perth. It's past the worst of the downturn. It's actually starting its recovery, and that's reflected very strongly in the sales activity figures that we are analysing here at Hotspotting. Canberra continues to be a very solid market with annual growth in its housing market now at 6% according to these figures, but Darwin is still producing negative figures. Whether you look at it monthly, quarterly or annually, the figures for Darwin are still negative. And in annual terms, the home value index for Darwin is down 5% for houses and 9% for apartments. So that's what a sensible analysis of one set of price data will show us, that there's still plenty of price growth out there, but the rates for Sydney and Melbourne are down, but Hobart is still showing very strong price growth rates. Canberra is still very solid, and Perth is recovering, while Brisbane and Adelaide are doing what they've been doing for the last 3 or 4 years, which is producing very small moderate growth. But I'd just like to reiterate the importance of ignoring media beat-ups about the month-to-month changes. It reminds me of a situation 2 years ago where Melbourne produced 1 month where its home value index was down, it was negative, and media treated that as evidence that the boom in Melbourne was over, and they started talking about prices being about to plummet in Melbourne. But in the next month, prices rose again, and the month after that, and subsequent months, and for the next 2 years, prices have kept rising in Melbourne. So that was a real media furphy based on misinterpretation of 1 month set of figures. So next time you read that in the media, ignore it. Only listen to analysis of data which is talking about, at the very least, quarterly figures, but preferably annual trends in prices in our major markets around Australia. That's it for now. Terry Ryder from Hotspotting. Talk to you again soon.